In this lecture, I want to show you a very simple framework to evaluate the growth of a company. This framework is called Ansoff Matrix. It's quite straightforward and it's gonna really help us understand how to grow a company based on a few and a couple key factors. Now, let's remember before we dive into it that, of course, those frameworks are useful as long as they help us think through potential business strategy that then we need to execute. But of course, those are just the starting point. Now, if we get to it, the Ansoff Matrix looks at a core couple elements, so the markets and the products. Based on the markets, whether we are trying to break into an existing market or a new market, and whether we're trying to break with an existing product or with new products, we're going to have different growth strategies. According to this matrix, then we're going to have four main really growth strategies that will go from market development to product development. Let's look at them one by one. In a case in which we really go in an existing market with an existing product, we look for market penetration. So here again, we're just trying to grow within the same market with existing products that we have. Think of the case of a company like Google that for years has been acquiring more and more market shares within the search industry by really tweaking its existing product, the search engine. Now, if we take a different scenario where with existing products we go to new markets, this is a case of market development. In a market development scenario, most of the work is really about understanding how to develop the market by growing the market itself. So you might have launched a new product in a market that is still under development, so it's not yet defined. Think of the case of when Facebook launched and it was gradually opening because, of course, social media or social networks already existed and were already sort of big market, but still the potential of developing the market was still quite big. Another example that we can have here for the Ansoff Matrix is whether we are going from existing markets and new products, which is a case of product development. So here we don't focus anymore just on the market, but on the product development side. Take up the case of Instagram, where the company to actually expand its market share in the social media space, it started to add new important features to actually make sure that it could further grow within its own market. Think of the case, for instance, when Instagram from Snapchat got things like stories and just had them built within the product, so that with the new product features within the same market, it could scale up. So new product features within the same market to grow further. Fourth example, and the last one that we're going to see for this lecture, is whether we're trying to grow within new markets with new products. This is a case of diversification where the company goes outside its boundaries. As an example, think of the case of Apple in 2008 or 7 when it launched the iPhone, which potentially could cannibalize its own iPod devices, and yet this was a case of diversification where Apple was also expanding because it was launching a product category that eventually would be much, much bigger compared to the iPod product and market. So those are some of the examples that we have, and this is the way you can use the Ansoff Matrix to understand how to scale or grow a company.